First, congratulations. You actually said we would hit Dow 16,000. We haven't stood there, and I'm just curious. You think we'll actually, before the week gets out, close at 16,000?
Hey, Adam, it's a crapshoot, as you know, but I'll throw my hat in the ring that we close above 16,000 this week.
Okay, so we close above 16,000. Here's what's disturbing me. You say that we need to have another recession in order for this market, or this economy, rather, to really gain traction. Can you explain to me why that's necessary?
Sure. Financial crises like we had in 2007, 8, and 9 have been seen around the world in the last 100 years in obviously many countries, and there's a very typical pattern they follow. After a financial crisis, you have what's called a post-financial crisis recovery. It's a recovery with stubbornly high unemployment and growth that's kind of frustrating and low. And you don't get back to a normal economy until you get through one more recession. So it's usually the big recession, and then you have a small recession, and then you have what was some kind of return to normalcy. We had the big recession in 08 and early 09, and from my seat, we're waiting for that one more recession. Companies are lean and mean. It's going to be a mild recession, but on the other side of the next recession, I think we get back to much better growth, much lower unemployment, much more normal behavior from the Fed.
Well, Paul, do we have some kind of correction to the tune of 2 to 10% before that recession, during that recession, or could it be a real gigantic correction over 20% should the Fed mess things up and bring about that recession?
The answer is yes to everything you said, and I think a lot depends on what happens in the next 2 to 4, 2 to 6 weeks. Look, at the sentiment in the market now is at rally-killing levels. We're not at bull market-killing levels. I think the bull market lives on into 14, but the market is in dire need of what I term a pullback, 2 to 8% to recharge the engine of the bull market. If we don't get that 2 to 8% pullback in the next 2 to 4, 2 to 6 weeks, then I think you're going to get early in 14 a 10 to 15, 18% correction. That would still keep the bull market alive. But I think if the Fed tapers too soon and too great, I think that does send us off into a much bigger bear market move in stocks of 20 to 30%. But that we're talking way down the road, not right now.
So I'm going to ask you two quick questions here. First, your thesis of, you got to have a recession, then a second recession. After you have a financial collapse to the magnitude we lived through in 2008, don't you have to have deflation? Doesn't deflation, and God forbid we get it, but that's what resets everything. And we didn't get that because of QE.
Well, see, I'll argue that, frankly, we've had deflationary forces in the economy since '98. I mean, the internet is the single biggest deflationary force in the world. So I'll argue we did have some deflation already. It wasn't to the magnitude of we're seeing in Japan now, and it certainly wasn't at the magnitude that we saw during the Great Depression. But we have had some deflation. The Fed is doing everything they can to engineer inflation right now.
But when you say we've had deflation, I don't have the exact data right up. Home prices up, what is it, almost 12% this year. It doesn't sound like deflation to me.
Look what home prices did in 08 and 09.
Yes,
I mean, home prices were in collapse. The first year-over-year decline ever. Deflation, first, money velocity, if you look at M2, is going like that. Yeah. That's deflationary. Unemployment is deflationary. Capacity utilization is deflationary. So you've got a lot of things that you don't have outright like you had in the 30s or in Japan, but Japan was half a decade late to respond. Bernanke was only 6 months late, which I give him a ton of credit, because had he not responded, we would have had an outright depression.
And on that note, I'm going to say thank you. I've got to give you the last word. I would love to continue it. Perhaps we'll have you back on real soon. Paul Schatz, thank you very much.
Thanks, Adam.
All right, well, the energy pits are jumping today after oil supplies, we learned, rose less than expected last